So a hawkish hold means that the BOJ decided to hold rates where it is. However, 3 out of the 9 people that were voting said that that rate should be increased. This means that the Japanese yen could gain strength even without actually increasing the interest rate. And if that is shocking to you, I'd like you to just stay to the end of this video because I'm going to explain it to you in the simplest of format you've ever heard before. So let's start like this. Imagine you stay in a country where the interest rate is almost zero, meaning if I put my money in the bank, I will not gain any single thing by the end of the year. And then there's another country where you can put your money, that means you can ship your money out there, and you'd get 2% of what you put in there at the end of the year. Obviously, when I put this on your table, I'm pretty sure you're definitely going to go for the other country. Send your money out there and leave it in the bank and let it stay there till it dies and grow as much as possible. In fact, you keep on sending money there every single time and every single year. However, you now hear the small news, that's tease that says, we're about to increase our own interest rate so that we can start paying you more. What happens is you, the investor, will start to put some of your money. You may not put everything, right? Start to put some of your money into your country, even though you're still sending some out there. But this is what the country actually needs. I just need some of you to put some of your money into the country. And that's it. That's the difference between the big interest rate hike and small interest rate hike and the crazy and the small and everything. The thing about the country is that there are millions of people living in it. So imagine millions of people now putting in, even if it's 10% of their salary into the country. It is huge money for the BOJ. It is huge money for the economy. Put this in mind and understand that that look to increase their interest rate is enough. Not that it is all, but it is quite enough to make that country's currency gain strength. That is one of the parts of the BOJ and the Japanese yen right now. How come I'm talking about this? Well, if you looked at the chart this morning, let's take a good look at the Japanese against the US dollar. Today was a massive red candle. Now, it's not red on my own chart because I use black and white, but today was a massive red candle. You can see it down here, negative 2.43% since the start of the day. And it actually went almost 3% because it has pulled back a little bit of what it has lost. All of this did not just happen just because 3 people said we want to increase interest rate, and 3 people and the remaining 6 said let us just keep it where it is. It's hawkish because nobody is saying let us reduce it further. They are all saying either we keep it where it is or we take it higher. That is why it is called the hawkish hold. But this is not the only scenario that caused what you're seeing on the chart today. There's another thing behind the chart. There's another thing behind the whole situation. And this is for those people that do not like to take note of fundamental analysis. You think it's gibberish. I'm pretty sure a lot of you got burnt technically today, but let's take a look at what the fundamental data is actually saying. Now, there are 2 things that really affect interest rates. There's the economic activity, actually 3 things. There are economic activities, there's the inflation, and there's the employment. They don't look at economic activities much because employment literally has a direct correlation to economic activity, and so does inflation have a direct relation to economic activity. So for central bank, the most important things are usually the job, aka the employment data, and the inflation data. How does this whole 3 things tie into what the BOJ or any central bank is going to look at the market and say they are going to increase rates or not? It's very simple. Let's take a good look at another scenario. Now, as the central bank that has to control the situation of the economy, the country, and the citizens, not through force, but through financial inducements, what they do is this. If I want my country to grow real fast, really fast, I'm going to look for investors and tell them, hey, I'm going to let you bring your money here. We'll give you more interest money when you leave your money here long enough. Why? Because if they bring their money here, I can use their money to induce the economy. Basically, induce growth, induce financial growth, induce so many things. That is the way central bank thinks. Now, think about that with the inflation. If they are increasing their interest rates, And this means that people will bring money to the bank just because the money is going to go up over a period of time. It means people would spend that money less because they are taking the money to the bank. This also means that a lot of businesses will be kind of stifled. They will not be able to grow as fast as they used to grow again because they cannot risk putting the money into risky business when they could put it safely in the bank and it grows better than the risk than they would take in growing their businesses. This also has a bad side. A bad side is the fact that because the business is not growing, it's not going to have to employ more staffs. So basically, employment is going to stay the way it is or go down sometimes. But inflation will also not go up so fast because there are less spending, especially by the business side. Because the business is not spending, people are not getting employed, people will also not spend too much. This will also slow down economic activities, but it will slow down inflation. Now let's flip it around and see what happens when banks decide to lower interest rates. If a bank lowers interest rates, businesses think in this order: if I put my money in the bank, I make less money than if I risk it out there. I could also still go to the bank and collect more money because the interest rate is small. I could use that money added to the money I have to do business, make more money, and pay back the loan because I now have more capital. That is what happens when interest rate drops. That is literally the whole shebang. But how does that affect the employment data and economic activity? It boosts it. It boosts it massively. What happens is, because businesses are making more money and they are trying to expand, expansion means more jobs. More jobs means more people get paid. More people get paid means more people have money. More people have money means more people spend. More people are spending increases demand of item. Demand of item increases, we all know the normal demand and supply curve, right? Price of items shoots. That is inflation. So central bank tries to do the catching it in front, catching it behind, catching it in front, catching it behind. And that is literally what is happening. Now let's take a look at that with the BOJ. Looking at the interest rate staying at 0.75% currently, which looks to shoot up. What do we expect? With all the things I just taught you now, the expectation is very simple. If the rate should go up, businesses will slow down. Inflation will slow down. Their inflation currently is at 2.5 compared to 2.2 where it was before. It's a good inflation data, meaning even if they increase the interest rates, they are kind of safe. That's the first thing you need to look at. But then again, look at their employment data. Their employment data is 2.7. Unemployment data is 2.7% compared to 2.6%. You can see the unemployment is going down slowly compared to the increase of the inflation, meaning the inflation's data is doing far more fine compared to the unemployment data. So therefore, employment data is not a bad problem to them right now. The inflation is good, the market is ripe. And then take a good look at the economic activity, the GDP, quarter over quarter. For quarter 4 of last year, actually went up. You see, it went all the way from -6%, even beat the expectation of 0.1% and went up to 0.3%. This is a show of the economy is growing. So increasing the rate right now is fair, basically. And with all of this in your knowledge, let's take a look at one last scenario that literally, should I say, stabbed the bed? Yeah, let's say stop the bed. If you remember last year, for those of you who were trading last year, back in around January-ish, even down to the January of this year, what happened here was price came up and shot down to the floor, shot down real hard. And price did what again? In very short period of time, it rallied up back. It rallied up so hard, but fell down even harder. And it took it almost a year. Did I say almost? It's literally a year because it's April last year. It took it a year, 365 days, about 260 trading days, to come back to the 160 mark. And what is happening again today? Another pushback. One last thing for you to take this into account and really put it together is, let's take a look at the news release on investing.com. Japan issues final warning as USDJPY test 160 handle. Clearly, the BOJ has always said this all the time. The 160 mark is a place where they are going to most likely come in. They're going to come in and do something, strengthen their currency, in as much as they rely on exportation, but they also rely on the fact that their currency has some sort of value, so that the people who are buying from home will not totally erode their cash and be cashless. That's the right word, cashless. So let's read the news. It's a very short news. It says, Japan's top currency diplomat, I don't know how to pronounce this first name, so I won't shoot it down. I'll just call the second one. Mimura issues a final warning on Thursday, that is today, 30th of April 2026, before taking any action on foreign exchange as the yen weakens past the 160 level against the dollar. Speaking to the reporters in Tokyo, Mimura said the government is monitoring markets across all fronts. He reiterated that the Japanese government has been communicating with the US on currency matters. The diplomat's remark came as the Japanese yen crosses the 160 threshold against the US dollar, marking a continued decline in the currency's value. Now, if you just hover over that point, you can see what the dollar is doing right now. He said it was 160 when he said that statement, but right now it is at 156.4, 3.8% fall, basically 2.4 from trough, right? Just today, in Monday. This is news that came out around what time? This was around 5 a.m. in the morning. And what happened at 6? Let's go to the 1 hour chart. The 1 hour chart is literally going to tell you what happened. You can see technically it was going up, and at 6 it stopped going up. At 7 it stalled, and 8 it started falling down. This is Nigerian time, basically. Don't forget, I'm in Nigeria, GMT +1. So if wherever you are, add whatever GMT you are to it, and you get the right time I'm talking about. But what happened was that there was a whole crash. That's basically what happened. And the crash can only be attributed to one thing: the BOJ intervened. The Bank of Japan literally intervened. They intervene every single time price has gone past the 159 mark. Once it gets to 159, expect BOJ's intervention. And we saw that multiple times in the past. We've seen it over and over again. I've said it over and over again in this channel. 160 mark, I ain't trading the yen. I am not trading the yen. If I want to even trade it, I want to short. I want to buy the yen at that point, because there's a higher tendency for the BOJ to come in and do its miracle. Now, if you're interested in getting this kind of information about different currency from time to time and being up to date, because people do not pay attention to fundamental situations, I do not hit the subscribe button, follow the channel, and always turn on the notification bell so that you'd get notified when my videos come out. I am Nicholas. I'd love to go into the fundamentals, but I also like to go into the technical strategies too. And when I see a strategy that is working fine, I call it out and I utilize it to its max. That is it for today. See you guys in the next video. Peace.